BMO's Simeon Siegel says Peloton's 5 million members would have to subscribe for 26 years each to justify the company's stock price. He's managing director and senior retail analyst at BMO Capital Markets. He's got Peloton, yes, as an underperformer. He joins me now. Simeon, it doesn't matter. You know, you gotta ride the Momo.
Good fun. Good to see you, Kelly. Listen, I think the point there's a lot of really interesting comments even in what you said. So the 5 million, Peloton isn't even at 5 million. So they're at 2, they'll work their way up to 3, and then the world is their oyster. So I think what is interesting here is, and you and I've talked about this all the time. I mean, I love the product. I think it's a phenomenal company. But I think that the question here is, are we giving them credit? Are we already looking further out to a member acquisition that we don't give other companies? And that's why we took a look at those numbers and basically just said, without opining and without trying to kind of make big accusations, just to say, what is the market saying? What are investors saying? And so the company has outlined a 15 million member serviceable addressable market. If we just take the gross profit dollars that those members would have to hit, that would imply a 6.5-year subscription. So a little bit more plausible, but still nicely above that churn. So it's a really interesting dynamic here where we can either look at this path from 2 million members north, or then we can also think about, okay, well, what are we assuming they're going to stay on the bike? And let's remember, Peloton as a company is still less than 10 years old.
Right. So you're talking about, I mean, look, if any of us think back to what we were doing 26 years ago, it's hard to imagine, that anything in our life is still the same, let alone a Peloton subscription. So I guess the interesting question is, why is the stock performing the way that it is? And, we often speak about the other retail lines that you cover and the metrics that are important there. And I mean, do the fundamentals matter here? Peloton clearly belongs in, it would seem to me, some kind of tech, subscription, software, that kind of basket, right?
So, by the way, you know what else is a subscription? Perhaps one of the first original subscription models, a gym, right? You go to Planet Fitness, they take a monthly recurring revenue from your bank account. You have to do nothing. So it's the original, this idea of thinking about we have a subscription model and we have churn. And so what's so interesting is that, we're talking about it in the context, right? I'm following up big tech conversation on CNBC right now. But at the end of the day, if we look at a Planet Fitness, which is public, has almost 15 million members, pays a monthly recurring fee, right? We collect a monthly recurring fee. It's $20 a month instead of $40, and the market decides they're worth, wherever it is today, $8 billion. So it's this idea where you can have these really good companies, but trying to think through how much larger are they? And by the way, the response is, well, fitness has a very high churn. And that's what I think is going to be so interesting. I think as the company matures, as the base matures, as we find there's increasingly more 3-year-old members in Peloton, because by the way, 3-4 years ago, it was 50 to 100,000 members. So as that comes, we're going to start seeing a lot more of what happens. And that's not even acknowledging competition's heating up, right? So last year, you had the best stay-at-home environment coupled with no real rivals. Now the amount of funding, the amount of dollars that are finding various parts of connected fitness. And we just did an 80-page research primer on connected fitness. The fact that we found 80 companies to look at is mind-blowing.
Right.
So I think that's where we're going to go forward. I think it's the beginning of the industry. But like you said with monopolies, how many industries do you know where there's one player?
And not many. And the stock's down 25% year to date. Simeon, you've been consistently cautious on it. And I think this is another good way to illustrate what's baked in at current values. Thank you for joining us.
Shepard Smith here. Thanks for watching CNBC on YouTube.